Hey, what's up guys? John here. Did you know the debt ceiling has been lifted 100 times since 1945? Pretty substantial number, 100 times. Every single time they act like it's never happened before. However, this time I think it could be different. And the reason I say that is if you look at what's going on behind the scenes, a lot of the countries around the world de-dollarizing, you look at a lot of people questioning the authority of the US dollar. You're hearing a lot about central bank digital currencies and different payment systems. This would make more sense to move into a default in the near future than it did in the past. In the past, the default didn't really pencil as well. I mean, there was less options. There were, citizens would not have adopted this. However, now moving into this digital type of day and age, it looks like this could be more easily adopted. Look at what's happened just over the last decade with Bitcoin and cryptocurrencies, NFTs, and digital stores of value. People would understand a central bank digital currency more now than they would have ever in the past, right? However, there's some really, really big changes occurring with, if you look at, for example, the last, call it 36 months, if you look at what's happened in Russia, you look at what's going on in a lot of countries such as, a lot of the BRICS nations. Venezuela announced yesterday they're no longer going to be using the dollar. You start to look at this, a default would push more and more and more countries away from the dollar, which is already what's currently happening. However, how does this actually play out to the economy, to the housing market, and to our lives? Well, I'm going to break it down in this video. So hit the like button. When you hit the like button, YouTube is going to share this content to educate more people about what's happening. And if you want to fix your credit so you can get debt-free or really position yourself to be able to potentially get financing, if we start to see a default, we start to see things happen, people with 400, 500, 600 credit scores, low 700 credit scores, you're going to have a hard time getting financing compared to someone that has, that 750, 780, 800 plus credit score. If you need help, we'd love to help you at greatcreditfast.com. That's greatcreditfast.com. Give us a call, 561-430-5900. Here's what's going on. So this currency, central bank digital currency, by the way, is going to be coming out next month. Well, 45 days, July. All right. So this is just a digital payment system. So this isn't the actual digital currency, but it's basically, it's like this, for example, this coffee mug, right? It's the mug. It's the mug. It holds the coffee. So they have that Fed payment system in, and then they can simply just insert it, right? They can simply just allow that system to do its job. And that's exactly what that's here for. It's to do that job. And so we look at what's happening here. This came out, do the math here, 90 days ago. They said that we're going to go from 100 million in CBDC value to 213 billion by 2030. So in 7 years, 6.5 years, how do you get that type of 200 or really 2,000x return? Well, you're going to have something big happen. Something big is going to happen to get people to move into that direction. Something very, very big. And so if we look at a couple of really interesting variables over the last 90 days, we had Silicon Valley Bank, you had Signature Bank, you had First Republic, you had Credit Suisse, you had a couple other banks as well, all go under. Well, if we look at how this all plays out with the real estate market, a lot of real estate assets, so mortgages, are held by these regional banks, specifically commercial mortgages, and all this connects with the debt ceiling. So Newsweek, for many who want to own their own home and not rent at some point, a healthy regional banking system is necessary. Unfortunately, with recent bank closures of Silvergate, Signature, NY, SVB, another wave of bank mergers and acquisitions might happen to ensure very few big banks that are left well capitalized. Remember JP Morgan picked up First Republic. But if only the big national banks are left, they may also make it harder for many people to get the mortgages that they need at a rate that they want. Well, the only reason JP Morgan was allowed to acquire First Republic was because it was a distressed situation. Otherwise, JP Morgan was too big to legally be able to acquire. However, if there's all these regional banks, all these small banks nationwide, and they remain in existence, how would they be able to grow this number to 213 billion? It would be much harder because all these different banks would have to follow procedures. However, if there's only 6 or 10 banks, it's a lot easier, right? And I'm not saying that this is some type of tinfoil hat thing. I'm just simply saying that it would make sense to hit these numbers, right? It would make sense. There would have to be a consolidation. A consolidation would have to take place. And so here's what is, this came out from the Commercial Observer, debt default could prove catastrophic for commercial real estate. Here's why. And commercial real estate is already a very, very difficult position. For example, I reported last week about a building in San Francisco that formerly traded for $350 million on California Street. Now it's under contract or about to go under contract for $60 million. If you look at what's happened with that building, it's 75% vacant. Mortgage rates increased 500 basis points. And so did property taxes and insurance also increasing. So if you have the cost to finance that building with incomes dropped by 75%, and a situation in which many buyers have to move in there and take on substantial risk, you're going to have a massive markdown on that portfolio, right, on that mortgage. Well, imagine what regional banks are going to be doing nationwide, and they're going to be stepping into problems. And so here's what they go on to say. They said, I think it would be the greatest boon in history. Those funds, no, it's right here. So my worry is that those banks that hold on to a lot of real estate in their portfolios, including mortgage-backed securities, because they also hold lots of treasuries, they'd begin to tumble really rapidly. And because they are financiers of commercial real estate projects, those who seek the financing would find themselves with fewer options. It would do much more than Jerome Powell would ever want to see happen, he's added. It would throw the economy into a steep nosedive. Not just an outright recession, but it would reach depression proportions. Even in the event that a number of these banks survive the consequences of the U.S. debt default, those few still remaining would find their ability to underwrite loans severely impacted by the higher cost of financing, and the existing loans would also be called into question. I'd expect there to be more loan defaults because of the pressure on interest rates, said real estate attorney Eric Goldenberg, a partner of this law firm. There are floating rate loans today, and by the way, $2.5 trillion in floating rate loans have to be refied in the next 24 months. So this would take interest rates way, way higher. Most of those $2.5 trillion mortgages are going to be in big trouble. They are floating rate loans today that would go higher and thus more difficult to refi, and loans that are in the shop today that people are looking to close, they'd foreclose as the rates go up. It would make an already difficult commercial marketplace that much more difficult. For those deals that would be lucky enough to survive the credit contraction and wave of loan defaults, a breach of the debt ceiling would result in a significant deterioration of value to the U.S. dollar in relation to currencies, according to Professor Chandler, paving the way for skyrocketing inflation, intractable construction costs, and mass unemployment. So all these things we import would become significantly more expensive. Material imports, including softwood, lumber from Canada, all the construction machinery, everything we import, it's an event without precedent. So what if everything our CRE executives doing to prepare for economic Armageddon in anticipation for a worst case scenario? Some are simply throwing up their hands. We are not doing anything above and beyond what we are doing in an already challenging environment, explained Sean Townsend, managing principal at Blue Vista Capital Management, a CRE investment firm. Production volume and debt financing have fallen off the map, but we are making a shift toward managing the quality of our book and preserving value. You look at it through more of an asset management lens rather than just production. Others are attending to present moment rather than catastrophizing for an unknown future. So you look at what's going on. You have to ask yourself, is it going to happen? Are they going to default? If they did, it wouldn't be crazy. It wouldn't be out of the realm of possibility if you look at all the sanctions that we've imposed overseas. You look at all these countries moving away from the dollar. You look at already record high inflation. And then we have a situation where the job market's already starting to crack below our feet. We're seeing an economy that is slowly fading away. I believe that this is, the odds of it happening, I'm not saying it's 100%, I'm not saying it's 50%, but I'm saying it might be 5%, it might be 10 or 15%, very low probability, but it wouldn't make sense if you just start to connect the dots with everything that's happening. And so I wouldn't write it off as impossible, to say the least. We live in a very, very unique period in history where things that we would have called impossible 4 years ago became possible just right around the corner. And so here we are. What do you think? Drop it below, hit the like button, subscribe here, and subscribe also on my second channel. Every week on this channel, some big changes are coming, by the way. Every week on this channel on Friday, I'm going to be releasing a podcast. I have one coming this week with Pace Morby. Every Monday, we're going to have a call-in show. There's going to be a phone number you can call in. We'll talk about stuff like this one-on-one. I'm really looking forward to it, so you can kind of give me your opinions, your perspectives. We can talk about this together. So be sure to subscribe for that. I'm not sure if it's going to be live here or if there's going to be like another platform, and then we're just going to post the live content here. My team's finding out the answers to that now. And then every probably Tuesday, Wednesday, I'm going to release a current event video on this channel. So it will probably go to 3 days a week. But yeah, drop your comments below. And if you need help fixing credit, we would love to help you at greatcreditfast.com. That's greatcreditfast.com. Give us a call, 561-430-5900. Last thing you want to do is step into a really, really bad situation and nobody wants to lend money. We're already going to probably see a massive contraction in lending, but I think there's still going to be a higher probability of getting financing, getting loans if you're viewed as very low risk. Catch you guys in the next video.